All right, and hello and welcome to the August Investment Outlook today. So, our friends in Singapore, Asia Pacific, and the Middle East, good afternoon and good evening. So, our friends in Switzerland and Europe, very good morning to you. The theme for today's discussion really is, can crypto decouple from the global market turmoil, right? And as always, we have Katalin Tischhauser, Sygnum's Head of Investment Research, here to share with us her views. And before we continue, as always, the gentle and quick reminder that all content and opinions presented in this live stream do not constitute investment advice. So with that in place, let's begin straight away. So the crypto market is rebounding, right, after a challenging and to some extent a scary start to August. And of course, we also see significant developments on the political front in the US particularly. And also, what may seem now a think of a distant past, the launch of the Ethereum spot ETF came into play in July as well. So amid such a landscape, let's touch on first the recent market volatility, right? We take the bull by its horns, and Katalin, on that note, August start was a rough one for the crypto markets, with major coins like Bitcoin, Ethereum, Solana, all seeing big drops. Katalin, perhaps you could share with us your views on the current market dynamics and the various forces driving such behavior.
Yeah, we have certainly seen a lot of volatility, actually, not just recently, but to be honest, all summer, mostly due to crypto-specific developments in the market. We have seen the market move up 20-30%, down 20-30%, actually pretty much throughout the summer on either unexpected large supply, for example, from governments, and then going in the opposite direction on the Trump trade euphoria. More recently, when the crypto-specific developments pretty much petered out, the crypto market started reacting to global macro developments. And certainly the global macro picture looks pretty fragile, and we see elevated levels of volatility in traditional markets. And to some extent, this is leading to elevated levels of volatility now in crypto as well. To be honest, after the S&P 500 rose 60% in 2 years, it made all-time highs all year. To have a single-digit percent correction, which is what it ended up being in the S&P 500, is actually not significant, and that in itself wasn't very relevant. What is more significant and interesting to watch is the massive spike in the VIX, which basically showed us how nervous the traditional markets are now. The VIX has come down, not to the point where it was before the spike, but basically markets are nervous. It's partly because of a big run-up over several years, all-time highs. Of course, valuations would be naturally stretched. There are serious underlying problems in the US economy and several other Western economies. Basically, funding growth with unpayable debt is not sustainable in the long run. There is this underlying fragility that definitely makes investors jumpy. The US consumer is also quite fragile. Doesn't necessarily appear so yet in the behavior of the consumer, but a lot of consumption has been funded by rising consumer debt. And we saw a CNN poll just recently which showed that 39% of people in the US worry about paying their bills. This is higher than during the great financial crisis. So there is all this underlying fragility that's making the market nervous. And when there are signals that point in the direction that maybe these negative outcomes could materialize, which we have seen with a couple of bad macro numbers, then the market reacts really excessively. For now, it appears that the Fed is still well in control. Actually, things have really calmed down for now. These bad macro numbers that the markets reacted to were very quickly actually negated by similar opposite numbers. So, for example, we had a week's jobs data that caused the sell-off initially. Then we had the strong jobs-related data shortly after. We had a bad manufacturing PMI, but then shortly after we had a good service sector PMI. Even the Bank of Japan, which basically signaled a policy change in terms of keeping no longer keeping the yen where it used to keep it. Even the Bank of Japan signaled very quickly that initially they just said that at least whilst there is market volatility, they're not going to hike rates any further. And then since then, there were even more statements from Japan that this year they're not going to hike rates further. So that yen carry trade, and also just the implications of a policy change by the Bank of Japan, which can have actually quite serious ramifications over a period of time, that also calmed down. Actually, earnings in the US have been pretty good. It's the Q2 was the strongest earnings growth since 2021. So it appears that for now, actually, we're also going into, of course, a rate cut cycle in the US. Some other central banks have already started cutting. So liquidity is also provided to the markets. For example, in addition to the expectation of rate cuts in the US nights, 100% expectation for September, but also the Treasury doubled its buyback program recently. So there is liquidity. And the bad macro numbers for now appear isolated. So things actually appear fairly calm, but there is this underlying fragility and this underlying nervousness. And the two things that might puncture this, although of course anything could theoretically, but the two likeliest things on the horizon, one is the exogenous geopolitical risks, some negative developments that could have serious implications, such as a wide war between Iran and Israel, or the market really deciding that the AI hype is over for now. Now, on both of these, at the moment, the signals are quite okay. The oil price has not reacted. It's not discounting a very severe outcome in the Middle East. And also, we had some very negative comments on AI, for example, from Goldman Sachs, saying it's the first time in history that expensive technology replaces cheap labor. So that's pretty damning after the very substantial AI investments. And obviously, Goldman is a strong opinion leader, but then others went the other way. So, for example, BlackRock is saying it's a buy the AI dip situation, and underinvestment in AI is a bigger risk than overinvestment. So both of these for now appear okay. There is just a lot of underlying fragility and nervousness.
Indeed, Katalin. Truly, I mean, the volatility, the fragility, as you know, the term that you would use, is really in itself to some extent an opportunity, so to speak, right, for those who are willing to go long vol or short vol for that matter. And if you were to zoom in, perhaps bring it closer to what, you know, the crypto space, if you will, zooming in on Bitcoin, right? We saw the price of Bitcoin dropping below 50,000 for the first time since February, right? And you know, after being so close to reaching 70,000 at the end of July, what in your mind is the cause of such turbulence that we've seen so far year to date?
Yeah, so the crypto market was actually already going down before these macro developments of the week jobs number and the Bank of Japan's policy change and so on. The market was already going down on concerns of more supply coming to the crypto market. And then that move was basically just exacerbated by the negative turn of events in the traditional markets. To me, the direction of the move could be explained based on the context. I think the magnitude of the move was surprising. And actually, the move happened in the face of fundamentally improving crypto fundamentals. So it seemed a little bit strange that the crypto market would react so much more than the traditional markets, especially when some of these events like the yen carry trade, the connection to the crypto market of that event is pretty tenuous. But I think it may just be as simple as thin summer volumes, right? So there is a strong market move and then supply coming to the market, and just the reaction was quite extreme. And not surprisingly, crypto whales were coming in to buy the dip after the move happened. It didn't make a ton of sense for crypto to move in that way over those few couple of days. But, you know, like I said, this came on the heels of a lot of whipsawing of the market over the summer. You know, we saw the German government and Mt. Gox really depressing the market, and then Trump coming out with very bullish statements, the whole political landscape shifting. Then it culminated in the Bitcoin conference, which had 3 US presidential candidates making speeches and saying some pretty bullish things. You know, obviously Trump saying a lot of bullish things, and RFK Jr. Mentioning the 4 million Bitcoin reserve for the central bank. Cynthia Loomis proposing the 1 million reserve. Vivek Ramaswamy also spoke. That was kind of the height of the excitement. And then we had more news of potential supply. Some of that news actually turned out not to be, it didn't materialize. It wasn't actually supply. It just appeared that it would be. And there was also a bit of a disenchantment, kind of the Trump trade has gone away. Maybe there is concern about to what extent politicians tend to keep campaign promises. The track record on that, of course, generally in the world is not fantastic. But also Trump has really been losing ground in the polling in the US. So that also took a lot of the excitement out of that trade since. So that's kind of where the market stands for now.
Sure. No, I mean, it makes complete sense, Katalin. I mean, clearly the drivers are there. And I mean, on that note, maybe again, just to refocus a bit on Bitcoin, right? We've expected the markets, the consensus have really expected a new all-time high, if you will, for Bitcoin, given the successful, or rather smooth, if you would say, halvening in April. And of course, then you have your ETFs coming to play, right? And that in itself was an invitation, so to speak, an open invitation to industry investors to start dipping their toes in, per se. Is that, therefore, maybe just to conclude on this topic, is the shift in behavior that rather that, the whipsawing or the flattening in behavior of Bitcoin prices, is that a sign for the broader crypto market? And is there anything that we should be expecting going forward?
Yeah, I think those bullish fundamentals are still in place, and that story I think is still there. For now, of course, the summer has been thin volumes as usual, and just people maybe paying a little bit less attention, and the market whipsawing and being pretty volatile. So we'll have to see how things turn out towards the end of the year. I think those fundamental drivers are certainly still in place in terms of more volumes. We're just seeing more volumes coming into, and not just more AUM coming into the Bitcoin ETFs, but from really new types of investors, which has been crucial to the bullish view that a lot of us have had on the market looking towards year-end. I think one question is, if anything breaks in the global markets, what will happen? What will happen to the crypto market? I think that's quite a crucial question, because even, let's say, because of geopolitical developments or some other turn of events, things could break in the global market. And the correlation actually all summer has been extremely low between crypto and the traditional markets. Actually, it was more than low. Crypto and the traditional markets were going pretty much tick by tick in the opposite direction throughout the summer. And So there's that decoupling until the last week or so when the market started correlating. There's also the history that on strong downside moves, the correlation between crypto and traditional markets is higher. So that's actually been the case to some extent always, but certainly since 2020, when crypto has become more mainstream and therefore more connected to other asset classes. And then the other side of that point is that a lot of the new money that has come into the Bitcoin ETFs, for example, and come into crypto recently, came in under the premise of Bitcoin being digital gold, right? So the question is because of that Bitcoin more likely to behave like gold in such a scenario than like risk assets? We actually saw that during these few days of turmoil, the new long investors who bought Bitcoin. So there were outflows due to arbitrage trades being closed, but that's market neutral. But the new money that came into the Bitcoin ETFs, they were not selling. There were no outflows during these days of the turmoil. So that could also be a sign that maybe it is going to be somewhat different going forward. And just to reiterate that correlation with global events aside, the fundamentals within the crypto markets actually are pointing in a positive direction.
Wonderful. So that gives us some degree of optimism, if you will, Katalin. So thanks for that. And maybe if you just take a step back towards what you had mentioned briefly just now about the changing perspectives from a regulatory mindset, from a political mindset, right? So perhaps timely to discuss, touch a bit more, to deepen that discussion, if you will, on what's happening in the US right now. The observations of strong support by the various US presidential candidates. For that matter, if you just take a deeper look at, for instance, Donald Trump, right? The changes in regulations, changes in the SEC, or for that matter, even establishing Bitcoin as a strategic reserve. Clearly ideas which are, not run of the mill. Do you think we are ready? Do you think crypto is ready for that matter?
Yeah, I think I want to reiterate that this shift in the US is very important. The lack of regulatory clarity has been keeping investors away, has been keeping a lot of big pools of money away. So if these uncertainties get resolved, for example, whether crypto assets are securities, mostly, if all these numerous lawsuits between the SEC and various crypto businesses are settled, this would significantly improve the investability of the asset class. So I think we have already seen that anything that makes the asset class more investable, for example, the creation of ETFs that make Bitcoin easily tradable and accessible, leads to both strong inflows into the crypto market and also obviously resulting strong positive trends. And there's so much more of that to come if this political trajectory continues down that path. For now, it's an indication of which direction it's going. The issues have mostly not yet been resolved. The lawsuits mostly have not been settled. So most of the actual issues are still outstanding concerns, but the trajectory has turned and is moving in a positive direction. And you mentioned the Bitcoin stockpile, and that's on top of all of that, because obviously, right, if the U.S. government, there's the Loomis Act that's now been filed, and to buy 1 million Bitcoin, RFK is of course talking about 4 million. Not that he's obviously likely to get elected, but basically, if there is anything happening in this direction of the government purchasing very substantial amounts of Bitcoin, then that also causes demand shocks, just as any large purchase tends to do in the crypto market, because the liquid supply of Bitcoin and most crypto assets is actually very small.
Sure. Okay. So with this increasing support, therefore, right, be it, a multitude, a handful, or even maybe more, right, of these policymakers, if you will, even Kamala Harris right now has come out to, or rather there are calls for Kamala Harris to even start, making the relationship with crypto a bit better with the Democrats, right, per se. On a broader level, right, so if you were to take a 30,000 feet view, will this, backing help crypto, the development, and will this continue for that matter over a longer run?
I think so. The presidential campaigns realized that crypto was a voter issue. This happened a few months ago, and I think it set a trajectory in motion. It basically, the way I see it, is the Overton window has moved. After RFK talks about a 4 million Bitcoin reserve, now that makes a 1 million Bitcoin reserve, such as the Loomis Act, a moderate proposal.
Right.
The conversation has shifted, and the political mood has shifted. And I don't even think that this will change irrespective of the outcome of the US election. Maybe the pace of it will be different, but I think this change is now on the way. And we have seen, for example, even the SEC, they have been quietly ending certain investigations. They have been sending out no action letters. This happened without any change in the government, any personal changes at the SEC. So I think this trajectory is irreversibly in motion now, kind of irrespective of the election outcome.
Lovely, Katalin. So I think there's reason to be, again, the reasons to be optimistic, the reasons to look forward are there. And precisely because we're looking at the broader crypto industry, let's move beyond just Bitcoin, right? And we talk about the topic that we had started the conversation with, the Ethereum ETF inflows. So we had a nice, all the anticipation, you can see the various headlines coming out as we built up to July 23rd. Started off strong, the launch, of course, the trading of the ETFs. However, I think it's been a bit lackluster, a bit of a mixed bag since. Any thoughts on this kind of lukewarm reception for Ethereum ETFs?
Yeah, it's not been great. We expected this. There are a number of reasons. The short marketing period between the surprise approval and the ETF starting to trade, Ethereum's lesser name recognition. Also, we talked about this quite a bit. We expected that as there is the Grayscale Trust is converted into an ETF, and now it has vastly 10x higher fees than all the other ETFs. This was the same in Bitcoin, same in Ethereum. People are switching out of that. Some of them are selling it, but a lot of them are at the very least switching into lower paying ETFs. And in the case of Ethereum, because the ETFs don't offer staking, we expected that more of it will switch from the Grayscale Trust into spot Ether than into other ETFs. And we have seen all of this happen. So basically, the first day inflows were good. There was seed money that came in strong. Surprisingly, through, for example, Bitwise did extremely well, relative to giants like BlackRock initially. But since then, we have just seen basically the fact that everything that we expected, the slow start. I don't think that this bodes well for the long. Sorry, I apologize. I don't think that this bodes badly for the medium to long term for Ethereum ETF inflows. But the start was not great.
Well, thanks for the correction, Katalin. Give me a bit of a shocker there, but
okay.
No, not at all. So very quickly then, I mean, maybe just to wrap up our conversation and in view of the time. So we've got the positive tailwinds in place, right? The political shifts, the changing in mindsets, if you will, and of course the the approval of Ethereum ETFs after the huge launch of Bitcoin ETFs at the start of the year. Right now, people are already asking what's going to be next, right? So we've seen a couple of issuers already filing for Solana ETFs. Do you think more are going to come? I mean, your perspective at least.
Yeah, so first of all, to really hammer home after I so terribly misspoke on Ethereum, I do expect that inflows will pick up. It might just take some time.
Sure.
The messages take time to get at, and also there's governance processes within these institutions to approve these products. They take a while. The time was just too short. We just see, for example, for the Bitcoin ETFs, Morgan Stanley just authorized these brokers to pitch the Bitcoin ETFs to high net worth clients. It's taken this long, and Bitcoin has far greater name recognition, and Morgan Stanley is definitely close to the market, and it's taken this long. We're just seeing there were one or two pension funds that came in very early on, literally one or two, but now we have seen more recently more pension funds going into the Bitcoin ETF. So basically it takes this long, and we shouldn't be surprised, and we shouldn't expect anything else. And I think the outlook is good because Ethereum ETFs make sense for institutional investors. The Ethereum ETF is almost, or Ether is almost a pseudo index for the crypto market. So if you want to be exposed to the asset class and the underlying trends, to be honest, Ethereum is the best way to do it because it's the leading smart contract platform. It's got all the applications, use cases building on it, by far the largest market share. So in lack of actual indices that you can invest in through ETFs, Ether is basically that. It's also an asset that's bases its value mostly on cash flows, revenues. It's much more relatable, to be honest, than digital gold. Like a lot of institutional investors don't even invest in gold. So this concept of digital gold, I think, is far more nebulous and less relatable. So I am actually very positive on the outlook for inflows for Ethereum. But when we look at other ETFs, like you mentioned, should they be approved, which eventually they will be, but there are now these Solana ETFs with a deadline in March. There is also this hashtags Bitcoin and Ethereum combined, which they call an index ETF. It would only be Bitcoin and Ethereum, also with a final deadline of March 2025. But they call it an index ETF because it says that for now it's these two assets, but if other assets are approved, then the number of assets in it will grow, and it will grow to be an index ETF. I actually find that a more interesting development than the single token ETFs. I think demand for single token ETFs is kind of in no man's land. Investors either invest in the single leading asset or an index, or like Ethereum could be a pseudo index for now, or an actual crypto index, just as they invest in index ETFs in other asset classes. That just makes a lot of sense for institutions. But single token ETFs could never offer a big enough universe for an active investor. So anybody who gets familiar with the market would then want to obviously trade the spot market. And those who are not that familiar with the market, basically there is no name recognition for these assets. Like the fact that the Solana Grayscale Trust trades at a massive premium, I don't think that means very much for demand, because the AUM in that fund is very, very small. So I think the exciting development, and whether that can happen by next March, is a question. It's doubtful because a lot of things will need to change. Right now, it would be impossible. A number of things need to change either in legislation or at the SEC, or the SEC stance, or in terms of lawsuits resolved. There's quite a lot of stuff that has to happen now. Can it happen, and can it happen fast? It is possible, but it's a very high hurdle. So we'll see whether it will or not. But basically, when it does happen, and it may be later than next March, but when it does happen, I think what I'm excited about is when it opens the opportunity for index ETFs. I think for that there should be very strong demand.
Lovely. Thanks so much, Katalin. And on that note, I mean, really, it's really refreshing to hear your thoughts. I mean, we clearly now have something to look forward to over the next 6 to 12 months at least. And you know, and thanks to everyone as well for dialing into today's August, or even further out for that matter, investment outlook. For a deep dive into today's discussion, and also, you know, to really dive into other topics driving the crypto markets, please download the August House View that we've just written. Also, do visit Sygnum's website. Go on to the Learn section and click on Research and Education, where you can find our intellectual capital, thought pieces, research perspectives for your reference and you know, consideration. Yeah, and do also join us, the community on LinkedIn, to stay up to date on our thoughts, launches, news, and research. So again here, thank you everyone. Wishing all a good day, good afternoon, and good evening as we sign off from Sygnum. Thank you.